Is Snowflake a buy after a 20% drop after the company reported their latest earnings report? Now bear in mind, for the reported quarter, a beat across the board. The problem was weak guidance, plus of course the CEO leaving as well. Now I want to start off by saying one thing. I've seen many posts, many people talk about, oh, the CEO has sold $200 million worth of share, he's pulling the rug, blah, blah, blah. The CEO still owns a ton of shares. All, if not most of those sales have been pre-planned. So whenever you're seeing this post, it's probably clickbait. Now, moving back to Snowflake and the current report. Currently, Snowflake is down actually 19.88% at the time of making this video, market cap $75 billion, and a forward PE now for the next 12 months, this is the updated number, 164.1. So definitely not cheap. This is also a company that is growing quite fast. If you look at the next fiscal years, what analysts are expecting, you can clearly see this is a company that is expected to grow quite fast. Yes, for fiscal year 2025, right now, bottom line is only expected to grow 14.57% and top line 21.56%. But then you're seeing a reacceleration in fiscal year 2026 with some more growth towards fiscal year 2027. Now, all of that is great, but that said, when buying Snowflake, you have to know that you're buying an extremely expensive business. No matter the metric you're looking at, this is not a cheap stock, has never actually been a cheap stock on all of these metrics that you can currently see on the screen. By the way, fun fact, the new CEO was actually an ex-Google SVP of ads. He founded Neeva, which is now part of Snowflake. And you want to guess what Neeva's motto actually is or was? It's basically search powered by AI, get answers, not ads. Pretty ironic from someone who was the SVP of ads at Google, don't you think? Anyways, coming back to the earnings report, this is basically a major snapshot. We're going to dive a little bit deeper and I'll show you some concerning numbers and then some comments that were made in the earnings call as well. So product revenue, they give us always product revenue specifically. So product revenue for the quarter, that grew 33% year over year. And then for fiscal year 2024, that grew 38% year over year. Net revenue retention is 131%. Now that number looks great, but it has been trending down each and every quarter. Remains to be seen when that number will bottom. As for total customers, that increased 22% year over year. Then moving on to customers with a trailing 12 months product revenue greater than $1 million, that increased 39% year over year. Forbes Global 2000 customers reached 691, that increased just 8% year over year. Now Snowflake's ecosystem and reach is pretty big and very impressive, which is of course one of the main reasons why it gets such a big premium from the market. Of course, it went IPO. It was a very popular IPO. Lots of analysts, lots of bankers got to participate in that IPO, etc. So maybe they were biased, and that's why you've seen since day one super high price targets. Could very well be. But this is not just any other company out there. This is a top class company with regards to cloud and AI. This is not just your, PowerPoint company. Despite us talking a lot about Palantir, I still think that Snowflake is a quality company. But you're paying a very high premium. Now, maybe right now, with a 20% drop, might be a good buy the dip opportunity. Remains to be seen. More on that later on. Now, before continuing, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. Would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. Now, I want to talk about a couple of things that were mentioned in the earnings call. So for the full year, they expect product revenue of approximately $3.25 billion, representing 22% year-over-year growth. They expect Snowpark to contribute 3% of product revenue, and this is important now. We are not including any other new products in our forecast at this time. Then we got a bit more color on the guidance being a bit too conservative maybe. So the CFO, he responded, there's a lot of new products coming into GA and public preview this year that we have not taken into account in our forecast, and we will do so once we start to see that consumption. And so we'll take this quarter by quarter for the year. In my opinion, I think now that the CEO is leaving, they are maybe putting the bar quite low for him to maybe guide a bit higher throughout the year. Could very well be. Or there's just some weakness in their products for this year. This is also an option. Now, with regards to the new products, the CFO said here there is a lot of pent-up demand for a lot of our new products that are coming out. Sridhar talked about Document AI. We have a lot of customers that want Cortex and Snowpark container services. So I think it's going to be more back-end loaded this year, and until we see the consumption by our customers, it's hard to forecast that, so stay tuned. Again, I find it very, very difficult to believe that they cannot really see the patterns that are already forming right now, despite having a lot of new products coming out. I mean, this sounds like sandbagging because there is a new CEO in place. And I say this because if we look at the remaining performance obligations, that reach $5.2 billion. That represents 41% year-over-year growth. So there's definitely more to this story. Now, looking at the other side of things, the most talked about aspect of Snowflake is SBC, stock-based compensation, dilution for the current shareholders, because it is extremely high. Now, if we currently look here, free cash flow for the fourth quarter, non-GAAP results, $324.5 million, 42% margin. Okay, great. If we look at for fiscal year 2024, free cash flow, $778.9 million, 28% margin. But then if we scroll down and we look at stock-based compensation, we can see this at $1.1 billion. An increase year over year as well. This is definitely still something that you should keep an eye on pretty closely. Red flag, maybe turning into an orange flag because it is not increasing as fast as before. But as a shareholder of this company, I mean, this is definitely something you would like to see decreasing over time quite fast. Now, as for the rest of the guidance for fiscal year 2025, they give us here non-GAAP product gross margin of 76%, which is also lower than fiscal year 2024. Non-GAAP operating margin of 6%, also lower than fiscal year 2024. And non-GAAP adjusted free cash margin of 29%, in line with fiscal year 2024. So again, just showing you that guidance was the biggest issue here. Now going back to what I just said before with regards to SBC. So here you can see non-GAAP sales and marketing expense as a percentage of revenue with regards to the fiscal years 22, 23, 24. Went from 43% to now 37%. Okay, that's great. But if we look at SBC, stock-based compensation related charges, fiscal year 2022, $215 million. Fiscal year 2024, $319.9 million. Yes, in the last 2 quarters that has come down, but for a whole fiscal year that has been increasing. And that means, well, shareholders are basically paying for that. Last thing here to close it out is the graph. Of course, you can see here now this is on the daily, big gap down after that 20% crash. We are now sitting just over the 200-day moving average. It does seem like the stock has found some buyers here on the 200-day moving average. Usually a great spot, in my opinion, to start a trade, to open a small position if it holds. If it doesn't hold, then look down below. Probably the last time it bottomed at around $140 or so. RSI is getting very, very low here at 33.83. So overall, to conclude, strong quarter by Snowflake, bad guidance, new CEO, maybe sandbagging guidance, shall I say, with the new CEO coming in. You're getting here a very, very expensive company. Great company, very, very expensive. And now with weak guidance, market is punishing that. Do share your thoughts down in the comments below. If you own that stock, if you're looking to buy it, let me know down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.